Hey everyone, welcome to the webinar on powering your asset finance business to drive more customer value through innovations. I'm Niranjan Anant and I head marketing at Profinch Solutions. Firstly, very warm welcome to all attendees and panelists. We really appreciate you taking time to be part of the webinar. For those of you who do not know of Profinch, we are a technology company focused on the financial services space, working with more than 95 financial institutions across 40 plus countries. We have offices in India, Singapore, Dubai, and Europe. And we essentially have two lines of businesses. On the consulting side, we've partnered with Oracle in the financial services space and implement and resell OFSLL, Oracle FlexCube, OBDX, OFSA, ORMB, ERP suite of offerings. Some of our largest customers are in the consulting space. On the product side, we have two strong platforms. One platform, which is a data platform, it's called FinClues, that essentially helps banks on the regulatory front, central bank reporting, operational reporting, dashboards, and analytics. Many banks across the Asia Pacific region, Middle East, and Africa using the platform. One of our customers is also a very large central bank in the Middle East. The other platform that we have is a digitization platform that's mainly focused on branch automation, agency, and branchless banking. We've looked at specific use cases like customer onboarding, teleoperations, agency banking, and have helped financial institutions with these solutions. So FinFlows essentially takes care of all your process automation and workflow requirements. Now, coming to the topic on asset finance, I think we all would agree that the asset finance space is evolving and changing quickly, and the reasons are many, as you would know. I mean, due to the changing consumer interests, regulations, technology, and all of us would agree that 2020 somewhere has forced businesses to relook at how they conduct business and approach and win customers, right? The changing landscape, I think, calls for businesses to make smarter and faster lending decisions, while at the same time also ensuring greater productivity and superior customer service. While we could debate on what the various areas that would set businesses apart in this space, whether it's customer experience and transforming the overall journey from a transaction to a life cycle, or having a futuristic platform that does away with the lengthy processes and offline protocols, or remodeling some of the business processes, right? And then I believe there are a lot of areas to be addressed, and that's exactly why we have put this webinar in place. Now, let me do less talking and have the experts discuss the topic more. So our conversation today brings three organizations in the asset finance space. We have Kubota Credit joining us. We have VIP Apps Consulting and Oracle Financial Services joining us today. Joining me today in the panel is Tyler White, Director of Product Management and Analytics at Kubota Credit Corporation, USA. Kubota Credit being a global player in the capital finance space for its farm equipment and tractors. Now, from Oracle Financial Services, we have Unmesh Pai, Senior Director and of Engineering and Strategy, joining us. We have Jeff Perham, Oracle Sales and Asset Finance Industry Expert, and Depesh Patel from VIP Apps Consulting. Depesh is a leasing and equipment finance industry leader, and VIP Apps Consulting are leading providers of management consulting, business process management, and technology consulting for the leasing and financial services industry. So Unmesh has been kind enough to lead today's discussion. So without further ado, let me have Unmesh speak to all of us. Thank you. Unmesh, over to you. Yeah.
Hey, thank you, Niranjan. Am I audible?
Yes, you are. Let me stop sharing my screen. Yeah.
Okay.
Yeah.
All right. Hello and welcome, gentlemen, to this interesting webinar that has been put together by Profinch. I am Unmesh Pai from Oracle, and I'm pretty excited today to host this webinar and moderate a conversation between the three industry leaders in the asset finance space. I feel it's a great opportunity for us to have these gentlemen on live here on this webinar to have some of the intense and most apt conversations on the asset finance business in current times. The reason I'm saying that is because I've been in the IT industry and been associated with BFSI sector for more than 2 decades myself, and I've been focusing on the asset finance segment for last 10 years or so out of this last 2 decades. Right? So, and I've seen a lot of ups and downs in these years, including 2008 economic downturn, which was triggered by financial services itself, and now COVID, right? COVID really impacts the overall lending business. And can I request who is not speaking to be on mute, please? There's some noise in the background. So I'm saying that the COVID has really changed the game, right? And it impacts the overall lending business and the repayment abilities of the individuals, the SMEs, the corporates, and that too worldwide. So truly, it's an unprecedented event by all means. And COVID has also shown us once again that, and it has demonstrated that any rigid or inflexible financial systems struggle to cope in the exceptional circumstances, right? So they are unable to naturally adapt to sudden changes in demand, usage, or cash flow patterns. So an interesting question to consider throughout this discussion is really how ready are we as we all wake up to this again. So I would try and get 3 perspectives in our conversation today. Now that we have 3 organizations coming together on this panel, we would get the perspective from the captive lenders side, and Kubota, Tyler is on the captive lender side. IT solutions provider perspective will come from Oracle side, and the third would be from VIP Apps Consulting, Deepesh Patel, who would talk about overall asset finance industry perspective. So let me begin by asking Tyler from Kubota Credit, which is a captive lender for farm equipment and tractors, as Niranjan said. And Tyler is a director for product management and analytics at Kubota. And Tyler has recently successfully led the transformation of their IT ecosystem for their asset finance business and has adopted Oracle's lending and leasing solution. We call it OFSLL. So Tyler, Kubota Credit being a global player in the captive finance space, how do you see the current crisis in terms of the impact on the business? What is the response to that, and what role does IT play in the overall response to handle this crisis? And I would like you to not only answer it from Kubota Credit perspective, but also from an overall captive lender's perspective. Over to you, Tyler.
Sure. Thanks, Umesh. So, the obvious impact is on both our consumer customers and commercial customers, whether they're Kubota customers or other customers of our competitors. The obvious impact is the loss of jobs, and on the commercial side, the loss of different sources of income that these customers had because of this crisis. And so I'll talk about that. And there's also another less obvious impact that that we found and that we saw across the industry that I'll speak to as well. On the obvious side, that the direct impact of people losing their jobs, of commercial customers losing sources of income, forced the industry to take a look at their collection strategies and take a look at how they can, what we needed to do in order to be able to help out our existing customer base that we had, to manage the portfolio of existing customers, and then also be able to quickly adapt and implement regulatory changes that came. Things like the CARES Act in the United States forced lenders to do things like not charge late fees, to not be able to stop repossession efforts. We had to report, or to not report negatively on customers' credit. So the regulatory piece of it was a big one in the way that, as Umesh said, luckily for Kubota, in 2019, so before the pandemic hit, we replaced our legacy core system with OFSLL. And so that gave us, with OFSLL, what we found is that flexibility and the ability to configure rules, and the ability to post bulk transactions to help us manage these regulatory challenges that were thrown at us, that was key, right? And so that was what we found, and that was from a direct impact of COVID. That was the most obvious thing, right? Is how we take care of our customers, and how we manage, how we help them get through this. And OFSLL definitely helped us with that, with the configuration and flexibility that it has. The interesting thing that we saw industry wide, the less obvious impact, COVID, changed people's lives dramatically. Their day-to-day lives were completely turned upside down, and so people were no longer going into work. So buying habits, that the customers that still wanted to purchase, obviously that changed. Right now, people are at their home a lot more. They're not going into from a captive in the captive space. We have a dealer network. Customers aren't going into dealerships necessarily to make their purchases, and so that really we saw a big greater focus on our digital buying experience and what the customers' needs were. As the pandemic went on, and as people had more time at home, in our space with farm equipment, with construction equipment, some of these customers industry wide, because they had more time at home, they were doing jobs around the house and things like that, right? So the type of equipment that we started seeing the sales growth in shifted a little bit to more of that smaller equipment that people could use to do stuff around their house, right? And so that shift provided an opportunity for lenders to get more creative with their finance program offerings, right? And in order to attract those customers, a lot of lenders in our space did things like offer no payments for 90 days, no payments for 180 days, things like that, just to get people that had the time now to do stuff around the house and use the equipment, but maybe were a little hesitant to pull the trigger on making a purchase because of the current climate. A lot of companies got very creative with those finance product offerings, and we were on the Kubota side. We were able to do that because of the infrastructure that we have in place now with OFSLL, right? And so the flexible repayment schedules, different payment structures, whether they're annual, semi-annual payments, and then, like I said, that deferred payment option. Those were, some of the things that we saw from an origination perspective, changes that we saw in the market, and the way we were able to capitalize on that, was being able to have that flexibility with our infrastructure that we had in place.
Hey, thank you, Tyler. That was kind of an interesting answer. That, I mean, typically I have heard the impact of COVID on the financial institutions has been pretty stress and negative, but in your case, it's a little different, right? So that's an interesting piece. But I think now that you've had this transformation already with OFSLL, there must be something that will be there on your roadmap, right? So how do you intend to lead the way for the future with the recent technology transformation that you've had with Oracle? Can you throw some light on that, please?
Yeah, I mean, COVID has really reinforced our belief that we need to be able to adjust quickly, and we need to put a foundation in place from a system perspective that allows us to make those changes fast, right? It's great to try to predict behavior and try to be able to be in a position that you feel like what the market's going to do, in 6 months, in a year, and prepare for that. That's important, but obviously through this, every company has realized and it's been reinforced that you've got to be able to make changes quickly on the fly, and it's accelerated. Every company was already going through a digital transformation. The industry, customers, their expectations on what a buying experience with a captive finance company looked like. It was already going down that path, obviously, of being digital and not having to do as much in person and things like that. This has obviously just accelerated it, right? And so what we expect to see industry wide and our product roadmap, or our innovation roadmap that we're planning on at Kubota, is to continue to focus on that customer experience, from a digital perspective, making sure that we remove friction from the buying process, right? Making it easy for customers to, if they want to buy, a tractor from their bed, right, laying in bed, that they can do that. Being a captive, we still have our dealer network that will be supporting those sales ultimately, but making it easy, giving them the tools, the customers and the dealers, the tools to do those transactions remotely. Because I think we all agree that even once COVID's gone, the behavior, of the world is still going to be altered, permanently, right? So there's going to be things that don't ever go back to the same way, and we think that the purchasing experience is going to be one of those, right? There's going to be more people wanting to do that remotely. So we've proven, over the year that business can be done this way, and so I expect that to continue to a certain extent once COVID's gone. So with OFSLL, with what we have now, with that OFSLL being the foundation of our system, of our ecosystem of products that we have, the key that we're going to be looking at over the next couple of years is utilizing the extensions to, like I said, enhance customer experience, provide more payment channels to the customers. So I talked about the change in behavior from a buying perspective. From a servicing perspective and a collection perspective, that's also, a change, right? Customers expect now to be able to make payments to their lenders, as easy as possible, right? And so we want to be able to provide those options with text message payments or Apple Wallet payments. There's a million different payment channels that we want to make sure we offer. So that's what I expect to see industry-wide and from Kubota, is just the acceleration of the digital transformation that most companies have already started going down, and that's what we expect to do.
That's quite insightful, Tyler. Thanks for that. Before we move on, Niranjan, I think we have some poll, right? So,
thank you. Yeah, thanks, Tyler, for sharing those insights. So we've got a small poll that we want to administer, to everyone who's joined us. So you would see on your control panel, and I'm just going to start a poll, and we would like to understand as to what your views are on the question which we pose, right? And then, so I'm starting the poll now. Yeah. So please do share your responses. We'll give you about 10 seconds. So the question is, what has been the biggest challenge for asset finance companies during the pandemic? And we've got in the options, remote system access, finding new ways of doing business, helping existing customers, and job losses, business impact. Right. So let me just publish the poll. So we see that the majority of the people here, the audience has said helping existing customers, right? And then followed by finding new ways of doing business. Yeah. So any thoughts on that, Unmesh? Yeah.
I think it's kind of a mix of all, right? So there's no right or wrong answer there. It will always be a distribution, and all the answers are right. It's just a question of where is the more possibilities, right? Doing the business, my vote would have been to doing business differently or coming up with different business models. That's where I see a lot of impact, and that's where we would like to kind of help the lenders with our solutions that we have in Oracle. Right. So, but yeah, I mean, I can understand the poll results. That's how people are looking at it. So, I would like to kind of move on with this conversation, and I will come back to you, Tyler, in some time. I would just want to bring in Jeff now from Oracle, and Jeff is part of sales and an asset finance industry expert from Oracle. He's been in the asset finance for around 25 years now. And my question to you, Jeff, is again, can please be on mute? Maybe, I don't know, there's a noise in the background. Okay, so Jeff, question to you is that based on what we have heard from Tyler now, and how they are handling the current situation while ensuring their growth story, continues. How do you think IT and technology companies like Oracle are coming to rescue and helping out these captives like Kubota and others with their solutions?
Okay, that's an interesting question, of course, and I think it was really interesting what Tyler had to say about how they were able to react and adjust. Although I don't necessarily think that's reflective of the industry everywhere. I think with Europe in particular, I think at face value, we found that companies have responded really positively to the challenges posed by the pandemic in terms of the way they've moved to operating remotely, in the ways they've explored new ways of conducting business, and also the willingness of which they wanted to help customers with facing difficulty. So that's been really kind of interesting and positive. So we've seen initiatives, like deferrals and restructures, and all these things together paint the picture of an industry that was well positioned to respond to challenges. But I think behind the scenes, I think the pandemic's been pretty forgiving. We often hear words like unprecedented and exceptional to describe events and responses. But I think we need to ask ourselves, well, have the responses that we've seen actually been smart responses? And would they stand up to scrutiny if, say, customers weren't showing so much understanding and forbearance? And it raises the overall question about whether the industry is actually geared to respond appropriately to the same or similar challenges when they're no longer considered exceptional, when there's no longer quite so much kind of forgiveness for how long things are taking or how they're being done. So I'm going to take some context here from one of my favorite stories. I'm going to share a screen. I'm just going to put the screen up. Tell me when you can see the screen.
Yeah, we can go for it.
Okay, so this story goes back to World War II and the start of American involvement, and Allied planes are being shot down a lot over Europe at a devastating rate. And the US Air Force wanted to take action to reinforce the planes with armor, but obviously there's a downside to that of making planes heavier, less maneuverable, etc., etc. So the US Air Force approached a group of mathematicians and strategy people, which is called the Statistical Research Group. It was a group that was set up to solve problems in the war effort. And one of the people on this panel was a guy called Abraham Wald, who was a Romanian Jew who'd fled Europe in the 30s and was now professor of mathematics at Columbia University. So the Air Force basically supplied this team with data for analysis, the number of bullet holes grouped by location. And if I quickly just show, I'm trying to find the screen that I've got open. Sorry. Okay. So this is the sort of data you'll see coming up now regarding the bullet holes that were kind of visible. And and most bullets, as you can see, were around the tail gunner and the wings. So the Air Force had suggested reinforcing these areas with armor to enhance the kind of survivability of the planes. But anyway, this team and Wald in particular disagreed with this. He noted that the fact that this data was coming from planes that had survived despite the damage that they were seeing, and therefore suggested that it wasn't those areas that needed reinforcement, and instead he was more focused on what became known as the missing bullet holes, those in the planes that never returned. And he proposed that those therefore were in the areas where we weren't seeing any bullet holes in the returning planes, so around the cockpit and around the engines. And this obviously had a big impact in the survivability of planes, but there's something we can really take from this, and that is to reminds us to look for insight by considering data that isn't in the room. So switching back now to our industry and trying to think of the data that isn't in the room, so the greater context, the big picture. We've seen companies responding and working hard to support customers. However, when you sometimes dig below the surface, you start to see how difficult it's been for them, especially for the ones on legacy systems and old home-built solutions, which is still the vast majority of people in Europe. And simply, many haven't been able to respond in the way they'd like because these systems are already creaking at the seams. And instead, they've had to redeploy resources and put in place extensive manual workarounds. And I've heard a number of stories surrounding this. One example, one small, mid-sized independent finance company in the UK couldn't adapt to home working. They couldn't adapt their systems so people could access them remotely, and they basically had to react by closing their book to new business, by furloughing most of their staff and keeping a skeleton customer service staff. Not the ideal way that they would have wanted to react to the pandemic. There's another example, a much bigger bank-owned finance company who trying to help their customers offered kind of 3-month payment deferrals, and they ended up with, I think, 2,500 requests for deferrals, but they had no mechanism for doing that in bulk. So basically, there was 2,500 manual processes they had to undertake. And then you take the general observation, watching how the market is responding, and you kind of see an overwhelming lack of engagement through digital means. Even now, most of the responses have been fairly antiquated. It's been sent in emails and letters to customers with the "if you need help, call us" approach. So there's a lot of ways we could look at moving this forward and progressing in a way more fitting of today's technology. And I think it's these struggles that are shaping changing attitudes, the plans, the priorities surrounding the kind of next generation systems. And in thinking about this, I've identified 3 core factors, which in my opinion are the ones that are going to drive the decision-making processes going forward, that COVID-19 have influenced and are driving the decision process going forward. So if I just pull up the next one here, just to kind of list it. So the first point that I see here is that we have, remote working obviously has been a big adjustment everyone's had to make. For a while now, we've been talking to the market, and people have been seeking solutions with less reliance on IT departments, with more mobility, more availability. Cloud has been discussed extensively throughout the finance industry, but still, up until COVID, adoption generally has been pretty low. I'm not trying to be wise after the event here and talk about how useful it would have been to have cloud for people temporarily working from home. I think that's done and gone. But I do think there has now been a sea change in the view of flexible working, and it's here to stay. And that in order to keep and retain the best staff going forward, it's something that you need to be able to offer. And it's also about being prepared to handle the next natural disaster, the next pandemic, or whatever comes next. The second point here is a generic one, operational efficiency. And I've highlighted 3 key points within this. So basically, we're seeing a renewed focus on the use of online and self-service channels. I think Tyler kind of pointed at that within what he was saying. We're seeing a desire for greater automation and things like chatbots. And we're seeing lots of talk and noise around the newer technologies, the artificial intelligence, machine learning, Internet of Things. And I'm also going to kind of go back here to also the increased use of APIs. Now, this isn't necessarily a new technology, but it is a vital one in delivering new propositions and critical services that can boost competitiveness and improve the customer experience. The whole API economy is based on the added value that can be harnessed by API providers. And we talk a lot about, virtual companies like Uber and Airbnb, a taxi company that doesn't own any cars, and the accommodation company that doesn't own a room it rents out. And then you kind of have to ask yourself, is it such a great step now to start talking about equipment manufacturers that don't actually sell equipment, or asset finance companies that don't provide traditional loans? Although we kind of move on. Also, when we mentioned automation here I'm not talking about kind of piecemeal automation, the bit, the band-aids over today's pain points. I'm talking about a context, a framework for companies to be able to automate what they want, when they want, and in the way that they choose. And I'm also talking about how that can work with leveraging things like chatbots and self-services self-service capability to support it, and the ability to adapt workflow and products without development. The final point here was on flexible products and subscription leasing. Now, I did a talk last week, and someone, said to me, "Is this really something that's relevant to COVID?" And my answer to them, I'll start with this here, was, yeah, of course it is, because if you've got a product that is flexible and adaptable and naturally adapts to economic conditions, so you pay more when you're using it more and you pay less when you're using it less or not using it at all, then suddenly you've got a product that naturally adapts to the economic cycle. So here, whether we're talking about equipment as a service, whether we're talking about increased flexibility, whether we're talking about bundling with multiple assets or different asset types or value-added products, or whether we're talking bringing in Internet of Things applications, all these types of initiatives put the power of flexibility into the product. So suddenly you can start to look at things like reduced minimum terms or no minimum terms, upgrades, downgrades, asset switches, pay for use. You can look at monitoring use. You can look at monitoring the condition and the location of the asset. You can look at proactive maintenance and repair, and all this you can, embedded insurances and maintenance and servicing. So there's a lot you can look at. And add to this, you've got other flexibility which fits in critically with the kind of remote working scenarios. So things like electronic documentation and e-signature, digital identification. And then you've got stuff at the back end, dynamic and intelligent collections processes. All these things are absolutely critical in the way the market is going. So I'm just going to bring that back. So the second part, I think, of Unmesh's question was how are Oracle adding value to Kubota and to other forms of asset finance lender outside the kind of captive marketplace? And then my answer to this is really quite simple. And at Oracle, we're focused on providing a platform that acts as an accelerator, that enables the changes our clients need as organizations to boss the asset finance sector as it develops and it grows. We're geared towards, as a product, Oracle Financial Services Lending and Leasing, sometimes just OFSLL, it's geared to cloud adoption, and that is focused on supporting remote working with flexible integration, with comprehensive system monitoring. You're ensuring that you're always on the latest version of the software, which is, well, yeah, it's a great sales point, but in actuality, what it means is that frequent upgrades are putting those new features and new functionalities into your workers' hands to make them more productive several times a year. And also, if you're looking at something like a software as a service, a SaaS offering, you're only paying for the server and infrastructure capacity as and when it's needed. So, your business booms, you're paying more, your business cuts back, your costs decrease. And you've also got the always-on availability, the mobility, the availability. Most cloud providers will provide upwards of 99.5% uptime. So as long as your workers have an internet connection, they can get to the applications from practically anywhere. And then there's also the kind of economic imperative. Is it going to save you money as the purse strings tighten in the next few years? And in terms of cloud, and this is an old slide from 2018, but I think it's still very, very valid in terms of the business impact of the cloud. And it was a survey, it was some research done by Vance and Bourne, and you can see from here, basically moving to the cloud improves time to market significantly, increases company growth, increases process efficiency, reduces operational costs, and reduces IT spending and IT maintenance. And then we add to that the operational benefits of our solution, the ability to build and modify workflows and products without development, the fact that it already facilitates equipment as a service, the fact that clients can take advantage of a full suite of over 600 APIs, as well as in IoT web services. We've recently launched digital personal assistants aimed at both users of the system and end customers. And we have an automation engine which enables a vast range of core processes and transactions to be automated. So now you kind of start to think, so rather than these difficulties with processing bulk transactions, you're looking at an automated one-touch, rules-driven process to enable handling those requests without manual processing, yet ensuring you retain control over the process. In addition to these things, we strive as Oracle to work closely with all our clients and the industry generally. We partner with you to stay ahead of where we see the industry going. I think if you look at the next slide, this is our product evolution over the last 15 years, very high level, but you can see how the product has constantly built, constantly improved. I think you can see that you see the product being internationalized over 10 years ago with multiple currency and multiple language. You see cloud offerings way back in 2013 and rental and subscription products now, which have been around for several years. So we don't sit on our laurels. Development is already going on with a number of new and exciting initiatives. We're focusing on an era where shorter and more flexible contracts will probably become the norm, where usage will become a cornerstone, where reuse, recycling, remanufacturing is going to become more embedded than ever in our asset life cycles, and where your ability as the finance company to change and adapt your offerings and your workflows without development is more important than it ever has been previously. So, to kind of pull all this in and wind up, I think finance providers with outdated technology are going to face a difficult time going forward, just like their hardship customers, because the circumstances that we've seen can only be unprecedented once. Next time, it's something you've dealt with before, and there will be an expectation that you deal with it better. So from the struggles of the last year, I think it's important to learn, to evolve, to improve, and that a state-of-the-art solution platform makes the process of change more possible for you all. And I'm going to finish with a simple example. Going back to the slide here, the last slide here, I've just got a simple decision matrix, and I'm going to throw basically a scenario at you and two contexts. So the scenario is basically implementing a suite of API services to support customer self-service. And the two contexts are a system like OFSLL, and the second context is an old mainframe legacy system. So if we start with the old mainframe system, then it has no pre-built APIs. The system is going to have to be modified to work with the APIs when you write them. So therefore, you're looking at a change which is going to be on the hard side. And regardless of whether the payoff is high or low, if it's low, you're just not going to bother. If it's high, it's a significant project or significant challenge. Then you look at the OFSLL example, same scenario, but with OFSLL, you have over 600 REST APIs available to you, including dozens and dozens which deal with can supplement customer self-service. So basically, you've got things where customers can update their marketing preferences, where they can initiate transactions, they can get payoff figures, they can request payment day changes, whatever it happens to be. So these are APIs that are already built on standard processes, already available. So the process is relatively easy. So where you've got a high payoff, it's almost a no-brainer. Where you have a low payoff, it's a distinct possibility. The reason for that is just to make the point that decisions about how you evolve and how your company evolves are made in context. And it's really important you don't let your context hold you back. So, you want to set the standard in asset finance like we are trying to do with an Oracle. You want to do that with a technology partner that also matches your aspirations. And that's me, Unmesh.
Oh, that's fantastic, Jeff. It was quite a story with OFSLL, and I like your example of the war machine and the analytics and the data, and how the things can give different perspective if you don't look at the right set of data, right? So, thanks for that. This was quite insightful as well as very interesting here to hear the entire story. Kind of walked us through the last 2 decades of OFSLL and how we've evolved and what we are offering today. And being a product guy myself and leading this OFSLL, from a strategy and product management perspective, I can tell you that we are doing a lot more investments to take it to the next level, apart from what you already spoke, right? We can't talk about all that right now from a confidentiality perspective, but there is a lot of exciting stuff happening in the factory right now as we speak, and that's all going to come out in the market, 6 months to 12 months down the lane. So great. I think time for the next quiz, Niranjan, before we move on. You're on mute, I think.
Yeah, sorry. Let me just roll out the poll. I think the audience can see the poll now. Yeah. So what is the biggest priority for system change coming off the back of COVID-19 pandemic? We've got a few options over there. So we'll give them about 5 to 10 seconds. All right, let me publish it. It's going to take a moment here. Just for some reason, I'm not able to capture the responses over here. Yeah. So yeah, we do have the responses coming in. I think it's a mix of what we're seeing. I think broadening of customer self-service channels and chatbots is something that and we've got increased process automation also coming up. Yeah.
So I think that's pretty bang on. We've done something. I just want to add to this chatbot thing, right? And Jeff talked about it, but we've taken the product to the next level with the chatbots, and we've done some innovations in that area, and not limiting the chatbots only from a self-service perspective for the borrowers or the end consumers who are consuming the OFSLL service through the banks, but also created chatbots. We call them docubots, and those are deployed with the lenders, and the back office guys or the operational staff of the lender or the financial institution can now access the chatbots for different things, right? Not things like what is my last payment or change my email address or what's the payoff code for the loan, but for things like how do I restructure a loan or a lease, or things like it's kind of a help documentation or operations manual of the lender is also accessible through the chatbot. It's just that based on the role that the user has, the chatbot functionality extends itself, right? So that same infrastructure which Jeff talked about, which came from the Oracle Digital Assistants, that gives the chatbot to the end customers in the self-service mode, that has been extended and being leveraged further to give more, I would say, conversational capabilities to the back office users within OFSLL landscape itself. So that's something we have done, and that's been released just a couple of months ago as well. So there's a lot more that's coming in the bot space, and one of the areas I talked about, which is exciting stuff, is in this space as well. Apart from the machine learning and collections and those areas, we are trying to come up with a lot of innovation. Okay, I would like to move on from here. I know Pesh has been quite patiently listening. I just want to bring him in now. We've heard from lender perspective, which is Tyler from Kubota. We've heard from the solution provider perspective, that's Oracle. What I would like to bring in Pesh for is, first of all, Pesh is the founder of VIP Apps Consulting, Oracle partner, and Pesh has been in this leasing and equipment finance space for, again, more than 2 decades, as some of us. But he's been really focused on the equipment finance and leasing rather than the overall consumer finance aspect of asset finance. So let me begin by asking him what his thoughts are on what he's heard so far from Kubota and Oracle, and how does he see what are the market needs from the overall industry perspective, and not just purely from a specific segment of the asset finance which is captive. So, Epesh, over to you.
Thank you, Unmesh. And yeah, I'll just pick on some of the themes which both Tyler and Jeff highlighted. I think the key messages and the sort of overall perception, I think, which I just wanted to just summarize the two viewpoints, were the ability to adapt has come to the fore, right? And this has been both from a technology perspective, the internal business teams, the individuals, their family scenarios, on the home front, on the sort of a working day-to-day front. I mean, so the ability and the sort of the adaptability of people has been underappreciated, I think, over the last 9 to 10 months. I think that's something which, looking back even just 1 year, but in years to come, I think everybody will appreciate that intangible has been key. Now, some of the sort of trends which Tyler mentioned, those, and I would 100% agree, and we've seen these in other sort of industries where captive finance has played a significant role, as well as traditional financial services organizations offering new financial products and reacting to customer requests. I think so, but I think one thing to highlight again would be a lot of these factors, like the point of sale, the sort of omni-channel customer service, the ability to react to changing financial instruments. That trend had started, I would say, for the past 10 years, right? Since the sort of the recession, and you made reference to 2008, the resilience of financial services and that impact has obviously allowed for this reaction to COVID. So I think there's a few things there where the early adopters of those new channels, ironically, are the ones who have profited the best, right? And have been able to react the best. So e-commerce, digital selling isn't something new. COVID's just been, unfortunately, the kick in the rear that's accelerated that entire trend, both in terms of digital selling, customer support mechanisms, the channel of interaction, as well as remote working and the trend of flexible working. That's not new. It's just something which has been forced upon many industries and companies. But there's been a lot of positives. I think that's what we forget to hear and don't read about in the news. So I guess that, I think, coming back to the technology, and this is a technology webinar, the scalability and the agility of the platform is very undermined in a lot of buying decisions. A lot of buying decisions are made from a feature functionality validation, and solving for the now, or they're solving for 10 years time, which may or may not happen. So I think the key to this really is, and I'll come on to this point around platform and scalability, is picking that right infrastructure, that ecosystem, and your partner network is absolutely critical. And that's been the success factor for many businesses, ourselves included. Reaching out to your network, your partnerships, your alliances is critical to expand your offerings, expand your services, and that ultimately has sort of helped in a lot of ways and individual sort of scenarios. So coming back to, for example, one of our clients, they were heavily exposed to sort of retail and point of sale devices. So yes, they had a huge surge, right? And they were impacted probably worse than most, but the support we could provide was just simple mail campaign to send a sort of courtesy letter out to everybody. just to say if you're suffering from payment difficulties. So what I'm trying to highlight here is there's no one size fits all. Innovation is critical. Using your partnerships is also critical, and ultimately that's the sort of core underpinnings behind being sort of agile and flexible to react. Right. So that's, I think, in more of a sort of external perspective, as opposed to just technology being the answer.
Mm-hmm. Yeah, I think that's pretty interesting, because Oracle being in all kinds of sectors and different verticals, right? And I know you're from Oracle background, ex-Oracle, and you've seen it all there, right? So but I just want to extend that question further in terms of where do you see Oracle in terms of being ready to offer all that you just explained, because there is ERP in place, there is financials in place, there is lending and leasing in place. So all those things come together, which is kind of a requirement for a equipment finance or a captive or somebody who's in the equipment leasing or subscription business, right? So how do you see all these pieces coming together from Oracle, and does it help in a kind of a differentiator way from a Oracle offerings perspective to the industry? How do you see that?
Yeah, no, great question. So I think so. I'd like to answer that, I guess, in two parts. One is sort of the overall pattern of buying best of breed versus a traditional argument of suite versus best of breed. I mean that's gone up and down and over the last two to 3 decades. Mm-hmm. What's key here is that margin has narrowed significantly, right? There isn't such a big differentiation between best of breed and single vendor platforms who can offer a solution to almost every vertical or every technology stack layer that an organization would have. So that's the first part, and I'll elaborate. And the other is around the flexible pricing and flexible pay-as-you-use models that have been growing and obviously were critical in the past year. So when it comes to platform, some of the underpinnings, I would say, of databases, infrastructure, the ability to add new technology solutions, that's where a single platform provider makes the best, is the best investment of all. And that strategic decision from the very beginning is absolutely critical. For example, this webinar is focused on asset finance, although the lending side, the commercial lending, spiked obviously through the government-backed schemes, has increased tenfold. Right now, that's great because those companies who could react had the platforms to be able to scale, both from an infrastructure as well as from a software perspective. What that means in 2-3 years time and a bubble which may burst, that we don't know that, but that's the organizations who have been able to scale, add new portals, add new bots you mentioned earlier. Those are the ones who could react the quickest and as well as, I guess, have benefited the most, albeit for negative reasons. So that's the key thing. Now, critical to that platform is, if we think through the entire, we get locked into this conversation quite a bit, is the procurement decision, right? A traditional procurement decision would need, especially in financial services, there's a lot of vendor onboarding and vetting and cycles to go through. Typically, these could range from a month to 6 months. We've seen for onboarding a new supplier of software or services.
Sure.
Now, if it's an existing vendor, then clearly that path is much shorter, right? That's been proven, that's been evidenced, and ultimately, coming back to that term partnership, that's who an enterprise would trust to liaise with their their technology partner to help them solve a problem, right? It may not be in the particular solution area that they've implemented to date, but organizations like Oracle, and there's a few others who are sort of consolidating, acquiring, and can almost offer a solution to almost anything, from database to servers, all the way up to technology and features within vertical offerings. So as Tyler's business proves, is and one area which I think is under sort of not quite appreciated is sort of looking just sort of as a vertical. There's a sort of manufacturing and a marketing aspect to Kubota, which, depending on the organizational structure, they're currently, I'm guessing, disconnected. But so these are again the other strengths around a single platform provider, where the sort of supply chain management side, demand planning, all the way up to the sort of CRM aspects and the sort of external facing portals all make a difference. And then the last point, which I think I both in terms of financial instruments as well as the scale, is that as a service offering, right? The margins have narrowed. The path to enterprise software is no longer a 3 to 5 year project and investment. The minimums are lower. The path to reach to enterprise level software, even for the small to medium segment, is there. It's ready. It's available. So that's my sort of perspective, is platform and the cloud and the as a service pricing flexibility.
Absolutely, yeah. And just to add to that, my 2 cents on that is, yeah, I mean, these solution providers who are actually bundling all that together and providing that as a service rather than just selling the products as commodities, right, to the financial institutions, are going to be differentiating in the market. And there are not too many players like that. One of those is Oracle, which Oracle has everything from database to the ERP to the financials to the blending and leasing, to the the SaaS solution. So everything is bundled together as SaaS and being given, so that gives them the agility to quickly move and to address that point of 6 month cycle of sales. They can we call it click, try and buy. They can just check something for a smaller portfolio, go greenfield. If they like it, then they would first they will try it and then they will buy it, right? That option opens up for the financial institutions, and with that option they would like to kind of quickly move forward with the sales cycle and try it out and then take a quick decision, rather than taking 6 months to 1 year to make a decision to move to some other platform. So thanks, Pesh, for your inputs. I just want to check with Tyler if you want to just quickly respond on the disconnected pieces that Pesh talked about. I have a question on the chat which I would like to kind of follow up with you, Tyler, after you could just quickly respond to Pesh's point.
Yeah, I mean, we definitely at Kubota, we had a network of disparate systems, right? That we, through the OFSLL implementation, we've been able to consolidate, right? We had a separate origination system, separate from our servicing system, separate from our collection system, separate from our dealer point of sale system, separate from the customer portal. We had all of those, right? And through the implementation, we've been able to. It's been a phased approach, right? But we've been able to start consolidating those and utilizing the OFSLL platform to consolidate some of those disparate systems onto that, onto the one platform. And it definitely helps, especially with ensuring that the customer has that real-time data. And we talked about customer experience a lot and what the customer's expectation is. So with disparate systems, most, especially legacy setups like we had, it's usually batch jobs and files that you're sending, and then the customer accesses their account and they're looking at day-old data, right? Whereas now with we talked about the 600 plus APIs, even if you have an extension, even if it's not OFSLL that is fulfilling some function, that through those APIs, that real-time data exchange, it just improves customer experience. So.
Sure. So I would just open it for the questions right now. There are some questions on chat, and the first question, I think Tyler is you're the best person to answer that, and I would kind of this is a question that comes to my mind too. I'll just read up the question there. It just says that with digitization, there is a rapid growth of touchless and digital buying of equipments. Do you see in future there will be you know today dealers are playing critical roles, but will it become like Tesla, where there is no dealer? Do you see that future in near term, or it's kind of a
It,
dream?
it depends on any of our if any of our dealers are on this webinar, but no, it depends on the market segment, right? I mean, Kubota, for example, we equipment that we manufacture and sell we have various a pretty wide range of customer base, right? All from a guy that wants a mower, to mow his yard on the weekends, all the way up to major corporations that are buying millions of dollars worth of equipment, right? So that the customer, the type of customer is going to can kind of dictate that, right? So in my mind, our dealers are always going to play a role in the ongoing support. I mean, the sale of the equipment, the buying of the equipment, that's just one piece of the overall transaction, right? There's still that customer. Now they have your equipment, or they have your car, or they have whatever it is. There's going to be an ongoing relationship that you need to foster and maintain with that customer. And with Kubota, through our network of dealers, that's the plan. Now, we want to be able to help our dealers with pushing customers to them, even if we provide a touchless or a digital buying platform. I know Pesh mentioned e-commerce. Through those e-commerce platforms, you can still have dealer involvement, right? You can make it easy for the customer to purchase something electronically without having to go into a dealership. I know Jeff mentioned e-signature and digital authentication. All those things enable that type of remote buying experience. But you can still have the dealer involved in ultimately fulfilling that last, that you can get them 90% of the way down the road, and then the dealer can come in and close the deal, and then have that relationship for ongoing service and support.
Sure. So basically what you're saying is that maybe the role for the dealer will change. They will take up a different job, but there is definitely place for dealers in most of the segments that we have in the asset finance. Maybe there are a few segments which could be completely dealerless, but that's not going to cover the entire spectrum of asset finance. That's how I take it. Okay. So there's one more question which is kind of interesting. I think, Jeff, I would like to have your views on this question. So the question says, will the growth potential for leasing in the post-COVID world spell the beginning of the end of loan financing for assets? Right. So, I mean, we've always seen leasing has been always on the rise, and with the pandemic, I would just extend this question that with this pandemic coming in, I've seen a lot of car manufacturers have launched subscription-based, services, because they want to get rid of their inventory. Right. All the dealers are sitting on huge inventory. The car manufacturers are sitting on the huge inventory, and they want to get rid of it quickly, and people are not buying the assets outright. So they are kind of changing their offering, new business models. They have gone one step ahead of leasing and started subscription or renting of their cars, which is like Avis. I mean, something between Avis and Hertz kind of offering in the US market, and 2-year lease, something in between that. Like you can have an asset on lease for a month or two, and you can keep swap in, swap out those assets. Just pay monthly this much, and you have access to a portfolio or a set of assets which are of different types, from a sedan to SUV and so on and so forth. That's kind of a very interesting aspect from a consumer perspective. Based on my current stage, if I am on a vacation for a couple of weeks, I can just change my car from a sedan to a SUV. Or if I am working in that week, I can just go for a sedan car, right? And if I'm wanting for a luxury vacation, I can go for a luxury car. So that's very interesting proposition, I feel, and it's kind of taking it one step ahead of leasing. But definitely there is meat in this question, which says that is it beginning of end of loan financing for assets? I don't know what the answer is, and I have some point of view, but I would like to hear from you, Jeff, what your answer is.
Okay, I mean, it's an interesting question. I think you find that leasing, it always does well in times of economic recovery. So, you know, it always does relatively well. And I think this time there are other factors that you mentioned, Umesh, as well, in terms of moves already towards usage-based leasing and broader subscription. So I think if you consider leasing in a very broad sense, probably more than you would package it up as a traditional lease these days. And I think we are going to see a significant move towards that. And I also think that leasing is also the best vehicle for supporting other key points like increasing productivity, improving efficiency, and enabling sustainability. You know, in terms of, if you're starting to look at the circular economy and assets being reused and recycled and remanufactured, then leasing fits better into that kind of model probably than the ownership model does. And I think it's inevitable we'll see a significant shift towards leasing. Although having said that, I think old habits do die hard, and even though millennials will lead the push into innovative products, I think for the older generation with the mindset stuck with ownership, it's going to be a long switch away from asset loans. I think they'll be with us for a while yet.
Yeah, but there is definitely a shift between the ownership, from ownership to usership, right? That's the trend which is caught up more because of this pandemic, and it will just accelerate from here. Although the end of owning the assets.
Yeah, well, I think as well with the car finance market, that's really been punched in the face several times by the COVID pandemic, especially. I remember back in the first wave that we had in Europe, I think there was one point where new car registrations in the UK, I think, were down something like 40-something%, and in France it was 70%, and in Italy it was 90-something%. So this is an industry that has been really, really rocked by the pandemic. Whereas I think things like agriculture, excuse me for saying this, but it's done relatively well. It's kind of maintained things. Agriculture, transport, and logistics. These have been industries that have continued to make progress. Whereas, you know, car finance has really been kind of kicked in the teeth. And I think where people were already looking at innovative products, now they're looking at those innovative products even harder as a way of stimulating recovery. So you're right, and you've seen all the manufacturers go to market with a subscription offering or partner with someone that can offer a subscription offering.
Yeah. I mean, I was having a conversation with Tyler a couple of days back, and he kind of mentioned that this shift of reversal of urbanization has led to the growth of Kubota in pandemic, because more and more people are trying to use the equipment, the tractors, and that's kind of very kind of anomaly to the impact of COVID on the asset finance business from a Kubota perspective. So that's an interesting story there. I just have just 4 minutes left to close this conversation. I just have a very quick one. Last question I would like to take, which is to Pesh. Pesh, how quickly do you expect the asset finance sector to bounce back? What's your quick answer on that?
I think I can just tag on to the previous question. It's the flexible service-based outcome pricing model is here to stay. I think it's already, all of us as consumers already pay this way, whether it be mobiles, consumer is sort of other products. The only change, and we keep calling it leasing, but it's effectively using something for an outcome. That's I think not going to change, and it's there to stay. It's just that the terms and ultimately the financial organizations first need to figure out how to come up with flexible ownership models for themselves. So somebody still has to pay for the asset, take the asset risk. But I think there's a lot of, I think there's already a lot of good things which will continue, and the last 9 months, 10 months have proven that people can adapt. So I think that's overall is a positive. I think a lot of negativity over the last 10, 11 months, but I think there's a lot of positives, and I think a lot has been sort of made of the negative side, but I think that's what we should take away is yeah.
All right, we are almost at the top of the hour. We just have a couple of minutes left, so I'm not going to get any more questions. Unfortunately, there are a few more which we don't have time to take up now. But I would like to thank all of you. I would kind of hand it back to Niranjan so that he can do the closure ceremony for this conversation. It has been lovely talking to all of you from my side. Thank you very much. Niranjan, back to you.
Thank you, Unmesh. Thank you, everyone. I think we've had a great session today, covering a lot of areas. Thank everyone for taking time out to attend this webinar. I again thank our panelists for making this happen. Without you guys, it wouldn't have been possible. We'll have the recording available soon for everyone, right? And then there are a few people who weren't able to attend, so we'll make sure that they get the recording of the session, right? And if you wish to get in touch with us or read up more about what we do, you can always visit us at profinch.com and vipconsulting.com and oracle.com/industry/financial services. You'll get all the information over there. Now at Profinch, we do keep conducting a lot of webinars on various industry topics. So I would, if you would, follow us on our LinkedIn page, you will get the regular updates over there. So till we meet again, have a wonderful day ahead. Thank you again. And I'm closing the webinar now. Thank you. Have a good day. Yeah.
Thank you. Thanks for listening.
Thank you.